All right, for this video, I'm going to go over a top 10 list of items that I think every new LLC should have once it's been formed and before you start actually operating the business. So I've got a list of 10 items here, one slide for each item. So we'll go through each one in a fair amount of detail. And then I will put the timestamps below in the description. So if you want to jump ahead to anyone in particular, you can do so. So if we start with the very first slide, the LLC Operating Agreement. So this is really, really important to have, even in cases where you might be the only owner of an LLC. So in most cases, people will think, well, I only need an operating agreement if I have more than one owner in there. So if I have a multi-member LLC, I need an operating agreement because we have multiple parties participating in this business. And so we need to outline what are the managerial roles and responsibilities? What are the different classes of units? How are profits and losses allocated? What do we do if there's a dispute, right? So if there's a problem between the owners within the company, how do they resolve those disputes? You would want that outlined in the operating agreement. But it's also very, very important for LLCs that only have one owner. And so we'll talk a little bit more about that later. Now, the operating agreement, I've seen all different types of operating agreements over the years. Some can be very simple and short, so you may only see an agreement that's 2 or 3 pages, and then others can be hundreds of pages long. So it really just depends on the complexity of the business, what kind of owners you have in there, and how much detail you want to put in to cover almost every scenario that could happen under the sun. So what are some of the state law requirements? Well, every state has, its own LLC Act, and so a lot of them use that model LLC Act, but they make varying, changes within their own rules. Now, most states don't require that an LLC have an operating agreement, right? The state statute is very explicit where it says, you don't need to have one. Now, some states do require LLCs to have operating agreements, but when you look at the language in the statute, it'll say something to the effect of that the agreement can be oral between the members, it can be implied, or ideally, it would be in writing. So you really have to look to what state you set up the entity in to determine what's required. And then lastly, we have some states, New York, for example, that explicitly require you to have a written LLC operating agreement. So again, important to keep in mind where you set up the entity, and that's going to determine what kind of state law requirements you have to meet in order to keep the entity in good standing. Now, in cases where you might have an LLC with only one member, and you're thinking, well, why do I need an agreement if it's just me in the business by myself? Well, it's because the operating agreement can override some state level provisions that would be the default if you didn't have a written agreement. And so one of the big examples is allocations of profits and losses. So if we look at Delaware law here, for example, this is the language coming from the statute itself. So under the Delaware LLC Act, the profits and losses of the LLC are allocated among the members and among the classes or groups in a manner provided in the LLC agreement, right? So that makes sense. They're saying, look, if you have an agreement, you can allocate profits, losses, distributions per the agreement. However, if the LLC agreement does not so provide, so in other words, if the agreement is silent on it or you just don't have one, profits and losses are allocated on the basis of the agreed value, as stated in the records of the LLC, of the contributions made by each member to the extent they have been received by the LLC and not returned. So in other words, if you don't have an agreement and you have multiple members in an LLC, the allocation of profits, losses, and other items are just pro rata based on the amount of money each person put in, right? And that makes sense. In a lot of cases, that's often what's preferred anyway, right? You want to be allocated income items depending on how much money you put in relative to the other owners. So if we look at an example here, we have John Doe and Jane Smith. They open a Delaware LLC, and they agree per the operating agreement that they're going to split profits, losses, and distributions equally 50-50. So they're 50-50 partners. Now, However, John and Jane contribute different amounts to get the business started. So they put in 100K and 50K respectively. So John puts in 100, Jane puts in 50. Now, if they don't have an operating agreement, because they haven't discussed this, they don't have it in writing, under state statute, the allocations are just reverted to a pro rata arrangement. So John would be allocated 66.67% of the company because he put in 100 grand, and then Jane would get the remaining 33.3. So if they don't have the agreement, that default provision would apply. However, if they agree beforehand, John has a little more money to put in the company, so he's going to do so. But they both agree that they want to split everything 50-50 going forward. So allocations of profits, losses, and then distributions. You can do that, right? The LLC operating agreements are flexible enough where that is permissible. All right, so if we have a look at slide number 2 here, so registered agent service. So when you form an LLC, depending on whatever state it's in, you have to appoint a registered agent that is physically located within that state. And so the registered agent serves a couple of purposes, right? So they're a matter of public record, so they're within the public database. And they're there to serve as a recipient for notices that might be sent to your company. So state or federal tax notices, let's say, if the entity is going to be sued, God forbid, the service of process is going to go to the registered agent, and then they're responsible for forwarding on to you. Now, it's always recommended to use a third-party service. So if you set up an LLC in a state where you live, you can appoint yourself as a registered agent. That's fine. A lot of people do that. That's okay. However, the third-party service is generally recommended because, one, it provides a little more anonymity, right? So some states, the registered agent address is public, but your information, your personal information might not be. And so if you use a third-party service, you provide a little more privacy protection there. But it's also about availability. So the registered agent service provider, it's generally a company, so it's a business, and they're available during regular business hours to receive these notices to make sure everything gets to you. If you appoint yourself as registered agent, and let's say you leave the country because you're on vacation for 2 or 3 weeks, you might miss something important, right? So it'll get mailed to you, but nobody's there to open it, or nobody's there to sign off on anything on your behalf. And so that's why the third-party service providers are generally a good thing to use. Now, the registered agent and the address shouldn't really be used for regular mail. I've seen it done before. It's generally not a huge deal if it's just a few pieces of mail a year. But you're really not supposed to be doing this. So if you want to use another third-party mailing service, you can. You just have to sign up for it separately. So most registered agent providers will provide that registered agent service, but then they'll also provide a virtual address and mail forwarding service as well for an additional monthly fee. So you can sign up for that separately and apart from the RA service itself. And that way you can have regular mail going to them. They'll open it, they'll scan it, and then they'll send you, generally PDF copies. You can log into their secure portal and view whatever it is they sent you. Okay, so EIN. So this is also very, very important. So your EIN is your U.S. tax ID number for the LLC. So the IRS is the body that issues these tax ID numbers. The tax ID number for a business is referred to as an EIN. It can also be used for trusts and estates. If you have a tax ID number for an individual, that would be your Social Security number or your ITIN. So important to remember the distinction there. Now, in general, every new business or every new entity should get its own EIN. That's kind of the default rule. There are some exceptions where you might not need one, and so we'll talk about that at the end here. But what are some of the uses for an EIN and why it's so important? Well, you need the EIN to open a U.S. bank account or credit card for the company. So when you go to the bank, they're going to ask for an EIN. They're going to ask for the CP 575 notice, which is the confirmation that it was assigned. So really important for that reason. You're going to need to file tax returns, right? So in order to submit a business return to the IRS, it needs to include a valid EIN. Same goes with a lot of state and local tax filings. If you've got payroll, all of these returns are going to need your business ID. To complete withholding certificates, so if you are going to be receiving payment from, let's say, a customer, or if you're opening a brokerage account or whatever it might be, you're going to have to provide a withholding certificate to that payor, which confirms the business name, address, its tax status. So whether it's LLC, is a partnership, S Corp, C Corp, whatever, and it's going to need an EIN. And so they'll need that to verify your business identity, but they also will need that information if they have to send you a 1099 at the end of the year. So another reason why the EIN is very, very important. And then lastly, payment processing services. So if you want to sign up for payment processing through, Stripe, let's say, you're going to need an EIN for similar reasons as the bank account opening and potential 1099s, right? So a lot of payment processors, depending on your volume, they're going to have to issue you a 1099K at the end of the year. And in order to do so, they're going to need your EIN. Now, an exception when EINs are not required. So this is kind of rare scenario, honestly, but it does happen. And so in some cases, you might not actually need that EIN. So if you have a disregarded entity, a disregarded LLC, the LLC is often required to use not the tax ID number of the entity, but of the sole owner, right? And so this is often the case when completing withholding certificates, Form W-9. So if you read the fine print on that W-9, it tells you if you're completing this for a disregarded LLC, do not use the EIN for the LLC. Use the tax ID number of the sole owner. All right. So if we look at an example here, we have Jane Doe opens a single member LLC. That's a disregarded entity. And she decides that she's not going to be filing any elections to make it a C or an S corporation. So all of the income in the entity is just going to get reported directly on Jane's tax return. So when Jane completes the W-9 for the LLC, if somebody asks for a W-9, she uses her own personal information. She uses her own social security number. All right. So that's really, really important to remember. So that's a scenario where you might not need the EIN. However, the reason I say that this is rare, because you still need an EIN for a disregarded LLC if you're going to open a bank account, right? So which is highly, highly recommended. So if the LLC wants its own bank account, the bank understands that it's a disregarded LLC, so they'll get a W-9 from Jane, right? But they still need an EIN because they're opening an entity account. So the only scenario where you won't really need an EIN for a disregarded LLC is if you're not opening a bank account, you're not doing any payroll, you're basically just setting up this entity to hold, let's say, an asset that you're going to transfer into it, and you just don't need any other kind of financial account. So it happens, but it's rare. So that's why I say in general, every LLC, even if it's disregarded, is going to need an EIN. All right, so next slide here. So business licensing and permits. So obviously really, really important. You don't want to be conducting business in a state or county, wherever it might be, if you don't have the appropriate licensing and permits, right? That's a given. So all of this is going to depend on the type of activities you're conducting through the entity. Most licensing is issued at the local level. So you look to your state regulator, you look to your city, you look to your counties to figure out what you need. There is some federal licensing for certain industries, but the vast majority are being done at the state and local level. All right. Now, what about insurance? Well, insurance is obviously very important for a variety of reasons. Many LLCs won't need insurance depending on the activities that you're conducting, but it's highly recommended to do so. And so there's obviously a lot of different coverages that you might need. So general liability for most third-party claims. If you're going to have employees, you need workers' compensation. If you're operating in the professional service space, you'll need professional liability coverage. Maybe D&O, so director and officer coverage, things like that. So really just depends, again, what kind of activities are you going to be conducting through the entity. All right, company website. So, everything's online now. People will look to a website to establish credibility. Get more information on the company, figure out whether you're legitimate or not, and obviously social media platforms as well. So there's a lot of good web hosting service providers. Many years ago, DIY for website building was just impossible unless you had really strong computer background. But now a lot of these providers, in connection with WordPress, make it pretty easy. So you can sign up for the service, build a WordPress site. The templates builders are pretty user friendly now. So you can do all that yourself if you don't want to pay for professional website design services. Now, what are some reasons why you might actually be required to set up a website? Excuse me. So payment processing. So this one comes as a shock to some, but payment processing service providers, if you want to accept credit or debit cards, a lot of times as part of their onboarding, they'll want to see a company website. They won't open an account for you unless you have one. And it's even more specific in that they want to see that your website contains things like a privacy policy page, terms of service page. They'll want to see a link to that and be able to review that. So if you're looking to accept credit cards or debit card payments through your company, many of those payment processing providers will need a website. So even if you thought, well, I probably don't need a website, or I just don't want to deal with it, if you're looking to set up accounts with those providers, you're going to need one. Professional service companies. So this is another one. Depending on where you're operating, you might be required to maintain a company website to display things like your licensing and other certifications. And nonprofit organizations often are required to have a website because they have certain public disclosure obligations. So most nonprofits will, they file a Form 990 every year, which is open to the public. So there's a lot of third-party providers such as like ProPublica, which provides public access to Form 990 information filed by nonprofits. But nonprofits also want to disclose their financial statements, so they want the public to be able to see that, see how much money they're making, how they're spending their money. And then lastly, the EIN and the tax income status. So that's another big one, right? So if you're looking to receive donations and you're a 501c3 public charity, the donor is going to want to know, okay, do you actually have a valid 501c3 status? And what is the legal entity name? What's the tax ID number? Because the donor, so the person gifting or contributing to the nonprofit, needs that information to do their own tax return. All right, so that's why having a company website in that context might be very useful. All right, so on to bank accounts and credit cards. So we talked about this earlier briefly for LLC bank accounts and the EIN issues. But having separate accounts is really, really important, not just for record keeping and tracking business revenue, business expenses, but you need to separate your personal activities from your business activities. So this is that piercing the corporate veil, so to speak. So if you commingle your business and personal income and expenses, the LLC starts to look like just an alter ego of yourself personally as the owner. And that can destroy a lot of the liability shield that's offered to LLCs. So what are some of the basic requirements to get a business bank account opening? Well, this is going to vary from bank to bank. Some banks want to see all of the formation documents, so they want to see the certificate of formation that was filed so they can look it up in the state registrar, verify that it exists, right? And then maybe want to see the LLC Operating Agreement as well. And that's often to get a list of who are the owners, right? So they want to know who are the LLC members within the company. The tax ID number, again, very important. So the CP 575 notice, this is the notice once you apply to the IRS for an EIN and it's signed. This is the notice that contains the newly assigned EIN and when it was assigned, so what date. You're going to need to provide a principal office address and mailing address. Very often they want to see physical addresses, so you cannot use a P.O. box to open accounts, but they do often accept virtual addresses. So if you sign up for mail forwarding and you get a physical address, and then they'll assign you your own suite number, so your own mailbox number, that's okay too. You can use that. And then lastly, information on the owners. So banks have to know who are the substantial owners of the organization. And so generally they set that threshold at anybody who beneficially owns 25% or more of the LLC. So you'll have to disclose that information as well. Now, as far as banking options, this has certainly changed a lot over the last few years. So you have your classic brick and mortar banks. So those are the banks with actual physical locations and employees and bank tellers that are sitting in these locations. And then you have more of these online banking options that are springing up now over the last decade or so. So all of them are good, frankly. I mean, you're looking for banks that are FDIC insured, so they're regulated, and you have some coverage there in case there's any kind of insolvency at the bank level because there's a run on the bank or whatever it might be. But generally speaking, we're finding that the online banks are a little more popular because it's easier to get an account open. Particularly if you have LLCs with any non-U.S. ownership. So you can look to banks like TransferWise, or I think it's called Wise now. Revolut's another big one. Mercury Bank is another big one as well. And you can do a lot of this, pretty much all of it online. You don't have to visit the actual branch or physical location, while the brick and mortar banks often require an in-person visit. So they want you to go to the branch, sit down with somebody, and open the account. Now, another big one, and we'll talk about the accounting for LLCs a little later, but the accounting synchronization is a big perk to have with certain banks. So if you're using accounting software like QuickBooks or Wave or Xero, there's FreshBooks, there's a ton of options out there now. You can basically link your bank account to the software directly, and the software will automatically down the ledger. So they'll download the transaction details for you and have all that data posted. So it saves you a lot of time from not having to manually key in entries and build your books that way. You can use these online options and it makes your life a little easier. Okay, so payment processing services. So we touched on this earlier with respect to the company website issue. Payment processing, very, very important to accept debit and credit now. Most customers will not just expect that, but they'll demand that. They don't want to pay in cash. And so you can use, obviously you can still accept cash payments if you're running a business, so cash checks, wires. Zelle is a very popular transfer platform now, which is pretty handy. Venmo, Cash App, all good ways to receive business revenue if your customers want to pay that way. And then when you look to major credit and debit card processing, the big players here, right? We're all familiar with these. So PayPal, Stripe, Square, and a handful of others out there as well. Now, as far as what's this going to cost you, again, every platform has their different rates. And a lot of those rates will vary depending on the volume that you're putting through the account. So some will charge a base monthly rate and the percentage of each transaction. So for example, you might get charged $99 or $100 a month and then 1% of each transaction. Some providers don't charge any monthly fees. It's just a percentage of the transaction, maybe 2 or 3%. So really just depends on what platform you're going with. And then again, what are the terms of the deal, right? Depending on, how much volume you're doing, they might get you, a lower transaction fee rate. So it'll help you save some money. Now, so we already touched on this. Many of these providers will verify the company's existence through their website. So those things are really important. And then lastly here, the information return filings that you need to be aware of. So when you use payment processing providers like this, depending on the number of transactions that you incurred throughout the year and the volume, so the dollar volume, they might be required to issue you a 1099-K. So a 1099-K is sent to you and it's sent to the IRS. And it shows the gross amount of payment transactions that were cleared through those accounts for the year, so an annual figure, and then a per month figure. And then they'll show the total number of transactions as well. And so that information will be helpful to you when you do your tax return as well. So what are the reporting thresholds? Well, these are changing constantly. At least it feels like there's a lot of back and forth here. But for many years, the threshold is quite high. It was 20K or more. So if you had gross payments below that, you didn't get a 1099. And then they changed it to $600 or more. So now more people were within scope of having to get a 1099K. And then it was really difficult for a lot of these providers to deal with the increased volume of filings. So there was a transition period where they dropped it down a bit. And then now there's new legislation going around where they're going to increase it back to the 20K standard or 200 or more in transactions. So wherever you fall within that will depend on your business and how much volume you're doing in credit and debit. But also it'll depend on what we see with these legislative changes. They just love to keep changing it, so it's a bit frustrating, but oh well. Okay. Accounting and record keeping, also very, very important for a number of reasons. So just generally, when we talk about record keeping and bookkeeping, you want to track your business income, your expenses. You want to track your expenses by category, right? So what are you spending on office supplies? What are you spending on rent, insurance, legal fees, accounting fees, whatever it might be. So you want a proper accounting system to track all that. You also want a proper accounting system to track, your assets and debts of the company. So if you borrow money, obviously you need to track the balances of those liabilities as you make payments. If you're buying fixed assets, you want to track those values, the balances in your bank account, the cash accounts. You want to track all this. And so it's best to do it through an easy to use accounting platform. So you can use a desktop-based or a cloud-based one. Like QuickBooks, for example, offers both, I think. So there's a cloud-based product, and then there's just QuickBooks for your desktop. I think the cloud-based, the online option is pretty good. You can just access it anytime as long as you have a web browser, right? So it's pretty handy. Okay, now financial records, very important, right? You want to keep supporting documents for all your transactions, right? So you want to keep copies of your bank statements, credit card statements, invoices, customer receipts and invoices, things like that. And obviously, some of this is going to be in paper, but PDF format is okay. So if you have PDFs of bank statements or credit card statements, just make sure you download them, save them in a secure folder, because what we find is the online. If you log into your bank account online or your credit card account online, you'll notice that you can only go back so many months, right? They don't keep PDF versions of these statements forever. So you want to be in the habit of downloading them and saving them to make sure that if several years down the road you need to pull something up, you've got them. You're not relying on your bank or your credit card company to pull that kind of information. And what's nice is, if you have paper receipts or statements, obviously you can scan those. And with a lot of these accounting platforms like QuickBooks and Wave, FreshBooks, you can actually link, or you can upload, a JPEG scan copy or receipt or a PDF directly to the accounting system. So if you're scrolling through the ledger and you see an expense, office supplies for $85 in the ledger, you can double click on that and you can see the actual receipt. You can see the receipt that you scanned and then you upload it to the system. All right. Now, accounting and record keeping also very important for federal and state tax compliance. Right, so in order to accurately prepare your federal, state, or local returns, you're going to need good records. You're going to need records that accurately reflect the gross amount of income, all of your expenses. You're going to need to be able to separate out expenses that are non-deductible or maybe even partially deductible. So really important there. Statute of limitations on federal and state compliance. So generally, the IRS, for example, has 3 years to audit your return, to examine your return. So you want to retain records for at least 3 to make sure you're covered for that period. But 6 years is generally recommended. So 6 years Now, if you have the data space, go ahead and store it indefinitely, but these are the minimum recommended years that you should be holding these records. And then lastly, for accounting and record keeping, the industry requirements. So depending on what kind of industry you're in, you might need to provide a lot of this evidentiary support to a separate regulator. So insurance companies are a big one. So these companies have to submit financial statements to the state regulator. So the NAIC, for example, is the state regulator for insurance industry. And, you would have to provide them that information. And so those records obviously have to be good, or else you get in trouble. So another reason why accounting and record keeping is really important. And then nonprofits is another one. So nonprofit entities, depending on what kind of funding they have, they might need annual audits or reviews of their financial statements. And so if you're going to take your records to a CPA firm and they're going to want to audit your financials to give you a clean audit opinion, they're going to need to see all that support. And so that's why it's really important to maintain all those documents. All right. So federal, state, and local tax filings. So for your new LLC, the federal income tax filings is going to depend upon a couple of factors. So the first one is, how many owners do you have in the LLC? So if we have an LLC with 2 or more members, it is by default a multi-member LLC that's taxed as a partnership. So your LLC would be filing a partnership return, and that's a Form 1065 filing each year. Now, if you have an LLC and it has 1 owner or 2 or more members, the LLC could file a C Corp election to be taxed as a C Corp. And so then that would change your filing to a Form 1120 return instead of a 1065 filing, or if it's a disregarded entity, all the activities are just reported on the owner's return. The LLC, if it's eligible, so a bit beyond the scope of this presentation, but domestic entities, domestic eligible entities, so LLCs and corporations, if they meet certain requirements, they can file an S election to be taxed as an S Corp. And so if you go down that path, then your LLC is now going to be filing as an S Corporation, which is a Form 1120S filing, instead of one of those 2 previous filings. And then lastly here, the LLC with 1 owner. So we touched on this a little earlier, but if you have an LLC with 1 owner, it is by default a disregarded entity. So it's transparent for federal tax purposes, meaning all the activities just reported on the owner's return. So the LLC doesn't do a separate filing if it remains a disregarded entity. Now, the one little exception here, and I've got this this additional bullet point, is foreign-owned disregarded LLC. So a foreign-owned disregarded LLC is an LLC set up where the owner is a non-U.S. person. So let's say you've got John. He is a citizen of the UK and he lives in London. He's not a US citizen, not a dual citizen, and he doesn't make an election for that LLC to be a C Corp. He has what is called a foreign-owned disregarded single-member LLC. In that case, the LLC does have to file a return. So it files a 5472 with a pro forma 1120. I've got some videos covering that scenario, so I'll put those links below if you need some more information on that. But that's the one exception to LLCs that otherwise are disregarded and wouldn't need a filing, is that scenario right there. Now, other federal filings to keep in mind: if you have employees and you have company payroll, you're going to be doing payroll returns, so you need the 941, 940 W-2s. If you live in a state that has state payroll taxes and state unemployment insurance obligations, then you're going to have to do state filing items as well. Now, local and state filings, again, it just comes down to what state is your business operating in, and then also if you're operating across state lines, have you tripped over any other state level filings that you might need as well. So for example, if you run a business in Florida doesn't have any state income tax, but if you run your business from Florida and you might have an employee or an operation in Georgia, well, now you're going to need some Georgia filings, right? So you're going to have Georgia state filings, because even though that you are a Florida-based business, if you have operations, if you have sales, if you have employees in these other states, you might have some state and local obligations as well that are beyond the state where you set up your LLC. All right, and then last but not least, we have annual reports and filing fees. So this is going to depend heavily on where your LLC was formed. Every state has different filing fee standards, different rules for when you submit these, what information is submitted. But most states require an LLC to file some type of annual report to keep the entity open. So this includes some sort of document, and it's often in connection with a filing fee. If you don't maintain these obligations, you're looking at having the LLC potentially dissolved. So administrative dissolution basically means that the state says, well, you haven't complied by filing the annual report, you haven't paid the fees, so we're just going to cancel the entity. So that's certainly something you want to avoid. Now, as far as filing frequency, most states require an annual filing. And the due date is either going to be fixed for every LLC at a certain point in a year, or sometimes it's on the anniversary date of formation. So Wyoming, for example, wants you to file your annual report on the first day of the anniversary month of the company formation. So depending on what month you form the entity, you're going forward to next year, and it's the first date of that anniversary month following the month that it was previously formed. So it's not a one-size-fits-all. Delaware, for example, has the same date for every entity set in June. So that's a little easy to remember. But again, really pay attention to what state you're setting the entity up in, and that'll help you determine when you need to file that information. Okay, now what kind of information is filed with these annual reports? Well, some of the basic stuff here. So the name of the LLC, the registered agent name and address, and generally the principal address of the company. That's kind of the common three that you'll see across all of them. But some states require more information. So Florida, for example, wants you to submit information on who are the members and managers of a Florida LLC. And that's all a matter of public record too. It's one of the reasons why, Florida isn't ideal for, privacy protection, because there is a public register of who owns the LLC and who is the assigned manager. If you look at a state like Delaware, for example, Delaware only wants this information up here. It's name of the LLC and who's the registered agent. Done. So it just depends on the state. And then filing fees, as I noted earlier, are going to vary greatly depending on where you go. So Florida is a $138.75 fee every year. Delaware is just $300, and these fees are the same regardless of whether your LLC has no activity or it does $100 million in revenue. It doesn't matter. Some states much higher, right? California, Massachusetts, some higher filing fees, which is why, unless you're working from within that state, you often try to avoid those states. But again, just depends on where did you set up your LLC. Check the Secretary of State website in that jurisdiction to figure out what your filing fees are going to be each year. And in some cases, there might be no filing fees, right? So some states don't charge a filing fee. Some states don't require an annual report to even be submitted. Some annual reports are submitted every 2 years. It's all over the place. It really just depends on where you're setting up your entity. And really important to remember, lastly, that the filing fees are different from those registered agent fees. So what I see a lot of is people will use a registered agent service provider to maybe launch their entity, and they pay the fee for the registered agent service, but that is a separate fee from the actual filing fee to the state. So one fee gets sent to the state, the other fee would go to the RA to serve as the RA for the next year, or if you pay for 2 years in advance, whatever it might be. All right, so that covers it. I hope that was pretty helpful. Any questions, obviously feel free to leave a comment below on the video. I try to get to as many of those as I can. And I will include links below to some of the other items that we've touched on in this deck, like the Form 5472 filing I mentioned for the foreign-owned LLC. So please feel free to go check out those as well. And thank you so much for watching and sticking through it to the end here with me. And as always, I look forward to seeing you on the next video. Thank you.